Atlantic Council and Managing Director of Fannin Global Advisors, Frank Fannin.
Well, thank you all for joining. I've got a great panel. We're going to get right into it after I make a brief couple of introductions. We have a diverse panel to speak about a very big topic. Elisa Newman-Hood is the Executive Vice President and General Counsel of Accelerate Energy. Hunter Hunt is the co-chair and co-CEO of Hunt Consolidated Companies and chairman and CEO of Hunt Energy Holdings. And Steve Nally is currently the acting administrator and deputy administrator of the U.S. Energy Information Administration. Thank you all for being here. Steve, I want to start with you. Last Tuesday, the EIA released its short-term energy outlook, just a few days before missiles started flying. How'd you do on the forecast?
Well, Frank, thanks first for moderating the session. It's a privilege to be on the stage here with such knowledgeable people. As you mentioned, we released the short-term energy outlook last Tuesday, just before, as you said, missiles began to fly. But I think the short-term energy outlook is a good reference point for people about what the markets look like just before then. So at that point, we saw crude oil markets with having a bit of slack in them, with inventories building pretty consistently through the end of 2026. And for those people who are not familiar with the short-term energy outlook, it's our forecast through the end of 2026. And what we saw was reduced demand due to less economic activity, and also OPEC Plus's decision to move forward. Production increases is what really create the slack in the market. And so we forecast by the end of 2026 that crude oil prices would be below, just slightly below $60 a barrel, and we saw production in the U.S. falling just below the record high in the second quarter of 13.5 million barrels per day. So that's on the crude oil side. On the natural gas side, we saw a natural gas growth through this year and next year. And that's really because we're in the midst of a large build-out in the United States for LNG facilities. So the U.S. has a large market to sell into. We see U.S. natural gas prices are far below the prices in Europe, and so we see strong exports to European and Asian markets, and we see U.S. continuing to have LNG exports to 22% this year and 10% next year. So that's kind of how we saw the market. I think it's a good reference point for people going into it. As we said, there was in the crude oil market, you're seeing prices trade much higher. This week, obviously, but that's kind of where we saw a thing. There was, no price premium that was already built in.
Yeah, thank you for that. That was a very diplomatic way to respond to the issues, as a man from EIA would be. Hunter, if I may, your group of companies is really a standout of American companies in the fact that you go into those frontier areas. You can see through, to the extent one possible, to manage political risk, reputation, all those risks issues that really put a lot of companies, take them out of not seeing opportunities. How do you see the dynamics at play today? How do you see the trajectory? Where do you see opportunities as an entrepreneurial kind of company that you are?
No, thanks, Frank. And of course, we totally saw what happened last week. That was, we're odd. We're private, family-owned, third generation. It allows us to continue to be active domestically, but also internationally. And we believe some of the greatest opportunities, both for the company, but also for the local communities, are in those international areas. And we've gone to some odd places along the way. We were in North Yemen starting in 1981. We still have actually an LNG project that is offline there, but we're in Peru, we're in Tunisia, Morocco, we have production in Kurdistan. And you're right, people often ask about political risk, and they kind of view us, I think, more in the traditional wildcatter mindset. I think we would have a slightly different view of that. The problem with political risk is you can't put it in a spreadsheet. It doesn't fit well in Excel. Ironically, though, there are a lot of people that will run analysis in Excel and think, okay, this is great, I have it analyzed. And nothing in many ways could be further from the truth. I started off as a trader, commodity trader, early in my career. Forward markets are inherently wrong. If the forward market for crude oil is high, people will invest. Oftentimes they'll hedge, which means that when you get out to that point in the future, there'll be more supply. The same is true in reverse. If the forward prices are low, it's a disincentive for investment, and then you create the shorted situations. So in many ways, when you look at domestic or OECD type oil and gas opportunities and you're relying on those forward markets, they're inherently wrong. When we look at politics, we try to take the same mental approach, non-quantified. And so a great case in point, when we went into Peru in 99, I think Fujimori had just resigned by fax from Japan. I think we're on our 11th president today in those 25 years. But my father at the time was looking backwards and forwards and said, I think we have the makings of a country trying to become more transparent and stable. And we've had a fantastic run in Peru, all throughout the ups and downs that are there. The same has been true in the Middle East. We're very proudly in the Kurdish region of Iraq, even with the challenges of exporting oil through the pipeline through Turkey, which isn't right now. But we're taking a bit of a longer-term view. And so, when you have events like this week where there's a potential complete realignment of the Middle East as we conceive of it, we think there's a lot of opportunity for American companies and for those that are willing to bet on the people and the underlying growth trends that are there rather than just simply waiting for the dust to clear or trying to simplify it down to a simple model.
Yeah, so you're also, it sounds like you're focused on growth areas where the demand's going to be, and versus OECD, which is going to have, on a relative basis, lackluster demand.
That's correct.
Yeah, that's great. Speaking of kind of political risk, Elisa, if I may, you talk about these countries and political risk, and ever since kind of the Liberation Day tariff announcements, there's the mainstream media and plenty of administration critics have talked about the trade discussions, trade tensions, some say trade wars, are a new form of political risk that's really creating a headwind on American industry and American companies. You're a global company. You also are entrepreneurial and going out to around the world. How do you see these tariffs, the trade dimensions? Is that a headwind? Is it a tailwind? Is it something you're not even concerned with? How do you view it?
Thanks, Frank, for the question. I'm very grateful to be here today. I have to say specifically, I'm very grateful to be in this room today. While I commend Landon, my friends at the Atlantic Council, for their creative formats, I have to say it's quite nice. I know there's the 360-degree room across the hall, but it's very nice to actually be able to see all of you in front of me here. And as I look out in the room, I see a lot of friends and partners. I believe some of you will have heard my colleague Peter Haas speak about Accelerate 2 panels ago, but just perhaps a quick introduction for those who may not know us. So Accelerate is a market leader in LNG import solutions, particularly floating LNG import known as FSRUs. We are Houston-based. We've been in business for about 20 years, and we are listed on the New York Stock Exchange. So, Frank, to your question, I think I'm going to echo, Hunter, some of your optimism that you expressed about oil in the domain of LNG. So, obviously, like pretty much every company around the world, in the U.S. in particular, in the room, we are grappling with the trade negotiations, tariffs, what that means for our business. But I think the thesis that we've been able to arrive at, that I have in speaking also to colleagues, now that we've had a few, let's say, months to let this percolate and really reflect, is that U.S. LNG is poised to emerge emerge, we think, victorious from this period. That's for, I would say, a couple of reasons. Namely, as U.S. trading partners really look around the world and they are trying to redress trade imbalances with the U.S., U.S. LNG, which is a long-term, sort of large volume product, is really going to make a bigger dent in their trade surpluses than perhaps, let's say, more one-off items, cars, soybeans, what have you. And I think that's especially true in the countries, by coincidence or not, that have the largest trade surpluses with the U.S., particularly in South and Southeast Asia. And then what I also think you see is a confluence of those same trading partners making the pivot from coal and to a lesser extent liquid fuels to natural gas, which again increases their interest in buying U.S. LNG. And what I think we are seeing is U.S. LNG supply deals that are quite close to the finish line, and perhaps it's these trade negotiations that actually may push them the last mile. A great example of that is very recently JERA signed up, I think it was about 5 MTPA of U.S. LNG, which we really see as I see as a win-win, both for traditional allies, U.S. and Japan. I guess perhaps the last point I'd make, maybe cutting the other way, is yes, of course, these trade wars, as I guess they're becoming, and reciprocal tariffs we are seeing that they are to some extent blocking the flow of U.S. LNG. And of course, I'm thinking about China in particular. But as I look at it, I don't see that necessarily or really meaningfully changes the size of the LNG pie. It just changes how it's divvied up. So where China right now is getting LNG from sources other than the United States around the world, and then on the flip side, you have U.S. LNG that's finding a home in other markets, namely in Europe, again, at least for the time being. And again, I think we see LNG demand worldwide is continuing to grow. U.S. supply is there, and it's growing. So net, as I said, I really think that U.S. LNG is going to come out of this particular period really stronger than ever.
Thank you. That's a really interesting perspective. I hadn't considered that there is a knock-on benefit of the trade tensions. Of course, you expected that U.S. LNG would. It makes sense, as you described, in terms of the balance of payment question, that they would buy more. But in terms of its accelerating an environmental story, in terms of pushing forward on coal conversion, in particular in some of the Southeast Asian nations that you mentioned, that's something that I've not heard of, and I think that's something we should consider exploring a little bit. What are the co-benefits? I've not heard anyone talk about that. It's a fascinating point. Steve, the EIA's annual outlook includes projections, but they're all based on current policies. The current policies appear to be, well, they're probably going to change and potentially change rather dramatically. How do you see that? How do you outlook your next outlook as the reconciliation bill and other policies, which would pretty meaningfully change the Inflation Reduction Act, change demand scenarios, and certainly probably provide a little bit more pro-supply policy? How do you see that working through in your thinking and preparing for the next outlook?
Well, thanks for the question. Yeah, as you said, we put out our annual energy outlook for 2025 in April of this year, and it was based upon laws and regulations as of December 2024. So there is a lot of policy conversation, discussion, as you said, out there. We will certainly incorporate those into the next time we run an annual energy outlook. I think a couple key takeaways from that is as you know, we kind of just talked a little bit about what oil demand and prices and looks in our short-term forecast. In the long term, we, with the current laws and regulations as of December 2024, we show crude oil production peaking at around 2030, and then declining through the full forecast projection period. Sorry, not a forecast, not a prediction. It's a set of, so the AEO, for those that don't know, it's It's a set of projections, not forecasts. It's not a prediction of what will happen, but a varied set of assumptions that we give a range of outcomes so people can look at, use that in terms of how they might see the world unfolding. It's a range of scenarios that could unfold. But in most cases, we do see oil peaking around 2030 and then declining through the rest of the projection period to 2050. In terms of new policies, we'll certainly incorporate those in the next one. I think one way to look at the AEO is in the AEO 2025. We also included 2 alternative policy cases. One was an alternative transportation case. Policy matters. So in the alternative transportation case, we rolled back CAFE standards and tailpipe emission regulations, and you see the penetration of EVs change, the trajectory changes significantly. And we also included an alternative electricity case where we roll back EPA Rule 111. You see there, again, it has a significant impact, but like coal, for example, we show in the reference case and most other cases that coal pretty much goes away through 2050, but when you roll back the 111 rule, you actually see coal respond and come back. So it just is an example of how policy matters, and we'll certainly look forward to incorporating the new set of policies when we run the next AEO.
So no predictions?
No predictions.
Or forecasts, or no, okay. Thank you. Elisa, we, as I mentioned to Hunter, we look at energy markets often through a geopolitical lens, and there's certainly a lot of geopolitical stories playing out. Of course, the Middle East is an ever-present one, but of course, we've also been pretty consumed with Europe and energy in Europe questions. But there's a big world out there that's not just the Middle East and Europe. Where do you see the geopolitics of energy that is being underrepresented in the narrative and the discussions in Washington and elsewhere? Where should we be thinking that we're not? Where's the next kind of evolution of the knock-on effects of the geopolitics of energy? Where do you see it playing out?
Thanks, Frank. Well, I love talking about Europe. So I've spent a lot of time these past 2 years talking about Europe. Accelerate, since the Russia's invasion of Ukraine has put FSRUs into Finland and Germany. We've sold LNG cargoes into Europe. So I could talk about Europe all day, but I won't. In fact, I'd like to talk about a region a little closer to home, the Caribbean, in fact. This is top of mind, a region really that's top of mind for us at Accelerate. Just last month, we purchased all of Jamaica's LNG capacity. That's 2 LNG import terminals, a gas-fired power plant, and associated infrastructure. So we are looking, again, at opportunities to bring LNG, not only and increase LNG to Jamaica, but into the countries of the region. I've had an opportunity to visit a couple of countries in the Caribbean since the beginning of the year, and I'm going to be honest, I was pretty surprised by what I saw. I hadn't been to the Caribbean since I was a kid. I flew into an airport in one of these countries whose expansion was being funded by the Chinese. I drove, or I guess I should say I was driven, on a road that had been built by the Chinese, past schools that had, and community centers that had signage in Mandarin. I have to say it was a pretty big surprise. I came home, I did some research. I found that China has invested about $10 billion in 6 Caribbean countries over the past 2 decades. I know that's not an eye-popping number, but these are small economies, and a little bit goes a long way. I also learned that and this is, I think, quite amazing, of the 12 countries worldwide that recognize Taiwan, 5 of them are in the Caribbean, for now. I want to say for now. So again, doing more research, I learned, and I think probably of most relevance to this group, that China has made some pretty serious energy infrastructure investments in the Caribbean. So CNOOC and CNODC have upstream interests in Guyana. There was a time when a Chinese state-owned enterprise, they've since sold down, but own 10% of Trinidad LNG, so the only LNG export terminal in the region. And then, of course, you have all the associated infrastructure that China has invested in. So China owns one of Jamaica's 3 alumina refineries. They own electrical grids. They own ports. So I would say from what I saw and then what I researched, Belt and Road is really going quite strong in the Caribbean. So I think the question then from the U.S. geostrategic point of view is what do we do about that? And I like a quote that I read in an Atlantic Council paper recently. The Atlantic Council has done a lot of really good thinking and writing about Caribbean energy markets. And the paper called the Caribbean America's third border. So I guess the challenge or the thought, the idea is maybe it's time to reclaim our backyard. And when you look at the opportunities to invest, for U.S. companies to invest in energy infrastructure in the Caribbean, you look at opportunities to bring U.S. LNG into the Caribbean. I mean, the opportunities are there, the need is there, the desire to switch from liquid fuels is there. So, and the foundation is there, and I guess I would just make 2 last points on that. One is that the U.S., I guess not surprisingly, is the Caribbean's largest trading partner. We have last year, about $90 billion in trade, 40 billion of which is surplus. And then secondly, of course, and it's almost so obvious it goes without saying, is the proximity. So huge transportation savings in U.S. LNG basically arriving at the doorstep of the U.S. So I think there's a really strong foundation, again, U.S. Caribbean, that we should be building on.
Yeah, well said. Of course, the administration, Secretary Rubio, Deputy Secretary Landau, elevated the Western Hemisphere as a key location of focus, and I think that testimonial is why that focus is warranted. Moving over to Hunter, you heard Steve sharing some predictions on demand forecasts. I keep hearing and reading lots about what AI is going to mean for demand, and I'm not sure exactly if those projections on AI penetration has been incorporated in EIA's information quite as yet. But you're in Texas, the heart of this boom. Running these businesses, how do you see AI impact? Do you think both in terms of the energy demand expectations and also American industry ability to meet that, as well as the infrastructure to accommodate all of this new industrial revolution?
Yeah, it's pretty substantial and phenomenal, and I don't believe it's captured by a lot of forward projections that people have. I'll relay a conversation I had with the CEO of Oncor, which is it's Texas's largest utility. It's actually the largest one in the country. It has a peak demand of 31 gigawatts today, which just by comparison, Spain they peak around 40 gigawatts. So just this one utility is effectively 3/4 of Spain. With the large load, so they cover the Permian Basin, they pick up the oil and gas activities, but we have a lot of data center activity in the Dallas-Fort Worth area. It's the number 2 market behind Loudoun County here in Northern Virginia. Just with signed interconnects where they've ordered equipment, dirt's moving, things are moving forward, they have 9 gigawatts of large load that is coming online in the next 5 years. So they'll go from 31 to 40 gigawatts. And then if you go through the historic expressions of interest, so people will show up and they say, hey, I may have a data center, or I have an oil processing facility or a gas pipeline, or they screen those, and with a traditional screening that they would say has an 85 to 90% confidence that the load will show up, they have another 29 gigawatts of demand. It is, as they would say, it's not farcical, because this is what they're being told is coming. Now, it's absolutely true that the hyperscalers can afford to walk away from deposits in ways that perhaps other people haven't. So there are questions around the numbers. But it's staggering to see the energy ramifications of AI. And then you start to go through the geopolitical angles of all this as well, where clearly we need much more natural gas. The challenges we've been talking about for the last 2 days are the constraints around the combined cycle power plants. The turbines are hard to get your hands on. The electrical infrastructure at the transmission voltage level, you're looking at 3 to 5 year wait times. So it's really hard to see any of that showing up and saving the day in the near term. Ironically, for a state that in Texas today, again, with a state grid that peaks at 85 gigawatts, so a little bit more than twice of Spain, we have 40 gigawatts of wind. We have over 30 of solar, going to 50 in the next 3 years. But we've decided that we aren't too wild about the renewables. Batteries have gone from nothing to over 10 gigawatts. But we're quickly moving into the phase where kind of the old beggars can't be choosers. I mean, any piece of steel that you can prop up to help power what's going on, we're going to need. And the last thing, this flows into kind of the LNG side of the world as well, is a lot of our gas comes from, they call it associated gas production. So we produce a lot of oil out of the Permian. Permian's producing over 6 million barrels a day. So we'd be the second largest producer in OPEC right now if we were part of it. It's a huge field just by itself. But a lot of the gas comes out with that production. We're trying to work our way through, if natural gas prices in the States go from the $2 to $3.50 range, where we've been kind of floating around, to the $5 to $7 range again. If we see a return of gas for AI coupled with record exports coming out of the U.S. for LNG, I think geopolitically and politically here in the country, we're going to have a much more transparent and coherent conversation about how all these pieces fit together.
Yeah, I think it's an important point, especially with that demand. The volumes are the volumes. The constraint in building this out, the queue, I don't...
Phenomenal. It's just incredible.
But the normal citizens who aren't, signing up to use the AI engine to cheat on their essay in high school, someone has to pay for all of that, and that's going to create an interesting point. You're right in the middle of it. Elisa, I wanted to go back to you. You talk about the Caribbean and the frontier for geopolitics, great power competition. I've seen it too. I've been in Panama and seen the Confucian centers going to. I mean, it's pretty startling to see. But how about as a business? How do you operate in a place like the Caribbean? I assume that the reason why we see such a strong Chinese presence is because U.S. companies have kind of turned their back on the backyard for quite some time. How do you see it as an opportunity? How do you see it as just a business venture as a region?
Thanks. It's a great point. And actually, in an earlier panel, I heard Robert Fee of Cheniere remind us that the U.S. has no national oil companies, no national champions, right? So the companies that operate in this space are not thinking as much about geopolitics and advancing U.S. strategic interests. We're thinking about our bottom line, really, I think, to the point that you're making. Obviously, the tourism industry has done very well in the Caribbean, and I know that's what we all think of. I know as a civilian, when I think of the countries of the Caribbean, Jamaica, Barbados, Bahamas. Don't worry, I won't sing a Beach Boys song. Anyway, I'm thinking
it's
about...
the last panel, I think. It's okay. Go ahead.
I'll spare you. Anyway, I'm thinking of clear blue waters and sparkling white sands. But as an LNG professional, I'm thinking about opportunity and really business opportunity. And really, all of the elements are there. So you have the countries of the Caribbean rely for 1/3 of their power generation on liquid fuels, on diesel and HFO. So as we all know, not great for the environment and extremely expensive. And perhaps that's why consumers in the Caribbean pay about 3 times what we pay for power. So they're paying 23 to 37 cents per kilowatt hour, whereas in the U.S. on average we're paying about 10 cents. So again, I think because of the environmental benefits that a lot of these countries are very focused on, the cost benefits necessary for economic development needed to power the tourist industry, which comprises so much of economic activity in the Caribbean. Again, we see a lot of business opportunity if it happens to help advance U.S. geostrategic interests, all the better.
I love that alignment. Help America and help, move America's economic agenda forward. Well, thank you. We're at time. I just want to thank, on the 10th anniversary of the oil export ban repeal, I would like to just thank our fantastic panelists, and please would invite us all to give them a round of applause.